Good morning, everyone. Apologies, I slept in, so a little off my game this morning. Got a little too lazy on the weekend. How's everybody doing? Well, we were looking for any kind of a pullback in the overnight, and no luck at all. Absolutely no luck at all. So our overnight inventory is long, right? The majority of the inventory is above. And what I mean by inventory is just a fancy way of saying time and volume, right? Inventory is time and volume, and you can see clearly that yesterday's Friday's time and volume is priced here, and we're selling it up here. That's the blue stuff. For people who are market profile traders, we call that value area. For normal people, we call that cost basis. So the cost basis of Friday is being marked up and sold at a profit Sunday night and Monday morning. And what we're doing now is we're waiting or looking for some kind of a pullback. If you run, any kind of charting software, you'll look at the half-hour candles and you'll see, if you're running any kind of half-hour candle chart, you'll see it's completely, in the old days we would say boxed. So you can see there's, at this level right here, if you go and draw a line, let's make it red, right? So right at 76.14, right, 14 quarter, you can see as soon as the last, let's see, 6 half-hour periods for the last 3 hours, right? We've been above that 76.14. So say you were shorting the top of this, right? Say you said, okay, I'm going to take this and I'm going to pretend, or I'm not going to pretend. I'm going to go and go, okay, look, there's our cost basis. So you don't need market profile to do this. All you got to do is look at where the lows line up and where the highs line up. And see those three highs and those three lows, they're all at the same place. And this makes it simple for traders who are not, market profile people, cost basis people. See how simple that is? Right? Does everybody get that? Good morning, guys. Thanks, Raj. So you can see where they stop selling. This is where they initiate selling. You can see that on the profile. It's a little less clear on profile if you're not a profile trader, right? But you can see as soon as we get up to that, what we can even mark off those levels, right? So if you're waiting for a short, right? Well, what the hell did I do? Right? If you're waiting for a short, what do? You wait till the market accepts under 14 and a quarter. Where's your next bid? Your next bid is going to be down here, right? Around 12. And that's not a lot of money, right? Not a lot of money at all. But you can see that there will be bids there, and there will be bids probably somewhere here, you know? So it's a tight profile. So immediately what that tells you is there's not a lot of opportunity. Do you guys understand that you're trading and you're trying to find an opportunity to make money? At times in the market, there will be opportunity for you to make money, and at times in the market, there will be no opportunity for you to make money. Not a very popular thing to say when you run a trading room. When you tell people there's not a lot of opportunity for you to make money, they get pissed off because they want to make money out of thin air. But you can't make money out of thin air, right? It's just not possible. Any person who's been in business for any length of time understands that concept. Unfortunately, in retail trading and trading, we tend to forget these principles, business principles, and we think that you can make money out of thin air, right? Because everybody tells you now that, oh yeah, it's, you know, you can make money during any kind of market. Well, for retail traders, you can't, right? You know, for retail traders, you can't make money in every kind of market. You have to wait for a certain type of a market when business conditions align with the type of business that you do. So you just can't go and start pulling money out of thin air. It doesn't work like that. So this is a very quick way, and you don't need, if you have access to a candle chart, run a half-hour candle, you can clearly see there's no opportunity for a short, right? Those of you who think that you should be shorting the market right now, you'd be delusional, right? If you're a large trader and you built a short position here, your stop is 76.20. Because if it clears 76.20, you're going to be in a world of hurt. Because there's nobody to sell up here. There's nobody who owns ES up here. The only thing that will save you is if we run out of buyers and they have to put price on sale. Okay? That's why I'm trying to use a half-hour candle chart to show you that this and this are the same thing. Do you guys get it? So you don't need to have market profile. But market profile teaches us some valuable lessons, right? And we can take those lessons and we can translate them to a half-hour candle if you don't want to pay extra for the software, right? And if you don't want to spend 10 years learning all these crazy market profile terms, right? So you want to learn how to trade in a practical way that you don't have to spend 10 years trying, it's not like you're doing a PhD, right? You're trying to make money, and you need to make money, but you need to manage risk, and you need to do it in a way that you don't have to, quit your job and your family and everything else in life to learn this. So learn where they stop selling and learn where they start selling, right? And that is what we call, my friends, balance or cost basis. Right now we are in a distribution cost basis. We're taking the stuff that we bought on Friday, we threw it up here. The shorts are trapped under Friday's high here, and we're using those shorts trapped as leverage. So we're standing on their backs and we're selling our inventory. Now this is a wholesale business. Let's go take a look and see if it's at all possible for you to make a buck tonight, right? Let's go see. So overnight pointer control is 76.16. What does that mean? That means the majority of the inventory is being sold here. 70% of this cheap crap from Friday is being sold up here at 76.16. The blue area is the value area or the cost basis, right? That's a distribution cost basis, and the majority of it's being sold at 17. That's all it means, right? Market profile is a wonderful thing. Unfortunately, they've gone and make it so complicated that people pull their hair out trying to figure it out. And then they never make any money off of it, and they go, oh, market profile doesn't work. It doesn't work because it's not taught properly. Very simple. right? You can't overcomplicate everything and expect people who have a 60-second attention span to be able to catch it and make money. It's just delusional, right? So, look, we're monkeying around with the 76.16. Now, I've put a 1-minute candle chart because we are retail traders and we need to know what's kind of going on minute by minute because you get a much more clear picture than with the half-hour candles, right? So do you see how small those 1-minute candles are? Right? You see how there's a seller here? Now, a lot of people have been complaining to me saying this market's really hard to trade. It's hard to trade because we're at all-time highs and you have to get used to it. I was hoping for a bit of a pullback Sunday night. Remember, I put out the stops. I said, okay, you know, we closed here. You know, there's a stop down here. You know, and there's a stop down here. We didn't even get down underneath 75.84. We couldn't even take the L low or the J low, right? We couldn't even come back to the cost basis of Friday. Do you see that? I mean, of Thursday, right? Because there's Friday. So when we did that, the market opened last night. For you use trade the open, and it made a move down, and it didn't make a move down for long, right? This is a half-hour bar. The next bar opened here, couldn't get more than one tick lower. It couldn't take out the open. When the second half-hour candle opens and cannot take out the open of the session, that's a sign. You guys get that? Devil's in the details. The trade's to the upside, right? So had you been trading that, and had you just been trading off a half-hour candle, right? You see that the second half-hour candle opens, gets one tick lower. That tick does not even touch the open of the session. Okay? You go long there and you put your stop underneath 675.95, right? So the trade here would have been long, stop, and then use this stuff for the move up, right? Very, very difficult to trade unless you know what you're doing. Really, really hard. Then we have a short position here, right? Because when we took the high of the first half-hour bar, anyone who was short under there, now they're trapped. And then when the second half-hour bar opened up, we came down here to 7,600, couldn't break it. The shorts came running in, and they yanked price up. And this is what we call one time framing higher, or trend, where the lows are higher and higher and higher and higher. Right? That's an impossible chart pattern to short. You might as well take out a hammer and hit your fingers. You're going to have just as much fun trying to short as inflicting pain on yourself. It's a fool's game, right? So everything we talked about in the Sunday prep that I put in the trading room was completely invalid. Right? We're looking for a pullback. We're hoping for a pullback. No pullback, right? So when there's no pullback, you can either buy it long and hold on for the ride, but that ride's not going to be, it's not going to be stable and it's not going to be predictable because you're at all-time highs. Or you can wait for later on in the evening where it builds out a balance zone and try and trade this back and forth. But you can see how small those 1-minute candles are. And there's huge amounts of time where it's completely untradeable. So there's a look below and fail. Another one here. This is really hard to trade because it's in no man's land. Right? A look above and fail, but it's choppy. See how choppy it is? We want this kind of trading. We don't want this, right? This is hard to trade. Get it? So who's making money tonight? Wholesale's making money, right? because they can buy thousands and thousands of contracts on the bid and they can sell thousands of contracts on the offer and make a tick. You do not have the ability to do that. So you as a retail trader, first of the month is just starting out, cool your jets and wait for better opportunity. That's all you can do. And it sucks because it's the first of the month that everybody comes barreling in the market. They want to make money, right? I know I do. I could use an extra 20 grand, right? Yeah. You have to sit in a trade for a long time just for a point or two. Exactly. And is that point or two guaranteed, Ian? Right? When you're at all-time highs like we are now in an overnight session, unpredictable order flow, that point or two is not guaranteed. So you could sit there and just as easily lose money than make a point or two. And that frustration is going to screw with your head. And this is where trading psychology comes into play. Because if you have the common sense to know when not to do business, you don't have to go and sit on Dr. Phil's couch and tell him about your childhood in the 1980s when somebody stole your little red bicycle. Okay? This is where trading psychology becomes actually useful before you make money so you can make good business decisions because you have a tiny ounce of common sense and you can go, oh crap, it's really shitty business right now, right? It's really shitty. Look how small these candles are. Look at this. Now London's opening. Let's see if London getting any kind of liquidation, right? So that's where you use trading psychology, right? Trading psychology, there's no use doing all of these exercises and I overtrade and all that. If you're overtrading because you don't understand why the business is doing what it is, you're never, no matter how much trading psychology you use, you're never going to be profitable because you just don't understand when to have the common sense not to throw money into the wind. Get it? Very simple. Right? Now let's see if we can get past 76.15, which is the middle of this cost basis, right? London usually likes to liquidate lower, right? And you can see for sure we have, look, we had sellers here, now our sellers are here at 18.5, right? So we had one candle dip down, and right after that, the candle found the bid right here at 16. That is not tradable. You're not fast enough to trade a 1 minute candle, buy 16 and sell 17 quickly. That's what algos are for, right? Now, at the top of the half-hour periods named K, I, and J, there'll be stops. So as we creep up to that 18.5 where the white line I drew is, let's see if the sellers step in or if they let this thing breathe. If they let it breathe, it means what? If we get price over 18.5 and you print 18.75, 19, it means the sellers have seen buyers and they're going to see how they're raising price. Let's see how they take it. See, nobody bought it. Did you guys just see that? The red line lifted above the white line, but nobody bought it, so there was no print. See, there it is again. No print. Right? Pay attention. This is the most important thing in your life right now. If you don't know how to watch the offer in slow times, this is the best thing for you to do. Look, there it is. Somebody bought it. We got an 18.25 print. Let's see if somebody suckers 19. Boom, 19. Right? Anybody willing to pay 19.25? Not yet. See how the offer's moving up and down? Now you can see that is what sets the price. So when you're a trader, when it's slow like this, sit and watch the offer. Do yourself a favor. Forget about where can I take the trade? Is this a good place to go long? All that crap. Forget all that crap and say, oh, Can we get a sucker to buy this at 19 and a quarter? Right now, not yet. Watch the offer. The offer sometimes will stay there and the bid will move down. See? That means that the market, the sellers have seen buyers. They're just trying, let's see if we can print 19 quarters. See how we look. Look how we raised the offer to 9. Boom, there's the print. There you go. Now this is the mechanics of how markets work. Okay? So we dipped down to 16, we found the buyers, and then we led the buyers to the promised land up to 20. And we're going to fill them. Now let's see if the market stays above 18 and a half. This, my friends, is trading. Trading is watching the offer. You can have algos and you can have automated trading, and you can automate a process, but if you don't understand the process, how in God's name are you going to automate something that you have no clue of what's going on? Get it? I'm not saying I'm not against automation. I'm not against technology. I love that stuff. But you as a retail trader need to understand when to touch the stove and when not to touch the stove. You need to have some basic business understanding in order to automate a process. There's no point automating a process if you have no clue what's going on. And that's what we're trying to teach you here every day. That's what we're trying to teach you. We're trying to teach you how to understand something, right? Yeah, Ian, you're in the software business, so you understand, right? Because I tell you something, Citadel, Bank of America, Susquehanna, Jane Street, all the multi-billion-dollar revenue firms that act as wholesalers, they know what the offer is. That's their offer, and it's automated. So if they're automating something, why don't you learn what they're automating? They're not automating fibs and moving averages. They're automating order flow. Get it? Because they're not out there guessing. They're out there making. There's a difference between guessing what's going on in a market and creating a market. Right? So anyone who was short under 17 is now trying to cover. Right? And that's exactly what happened. Now, will this buying last? At what time is it now in New York? 3 in the morning? It might not. We might come right back down to 17. But those candles were just long enough to stop you out if you were short 17. Right? This is a very tough market to trade, but you sure as hell can learn a lot if you take the I have to make money hat off and put on the I need to understand what's going on hat. Right? The curiosity, if you can maintain a level of curiosity and try and figure out what's going on, that's going to actually help you make money. It's not going to hurt. You might think it's a waste of time, but it's not. Right? Learn how to be curious instead of greedy. Right? Short-term greed is what blows up accounts, what causes you all sorts of stress, unnecessary stress. Short-term greed, where you think you are owed a living in this business, is going to kill you. Right? Learn how to be curious, learn how to learn. And we'll teach you, right? And we'll teach you a process where you can make a living, but sometimes you're just going to have to not trade because it's not for you at this time, right? Like if you're a wholesaler, it's great, right? If you're a wholesaler and you've got billions in capital, that's great. But for regular people, normal retail trading, this is not a good time to be doing business because it's the first day of the month, all-time highs, and we're not getting any kind of liquidation at all. You know why? Because everybody who's short, when the market closed down here instead of up here, everybody got short down here. right? At the end of the day, they all shorted the crap of it. That's why they're all short here underneath 75, 7,600. They're all short here. And it shows in the overnight, right? It shows in the overnight. Really difficult to trade. Really frustrating if you're out there. If you're swinging at every trade, I'm going long, I'm going short, I'm going long, I'm going short, you're going to have a hell of an evening, right? At the end of the evening, they're going to have all your position, they're going to have all your contracts, and they're going to have all your money, right? At the end of the evening, they're going to have all your money and they're going to have all your contracts. And you're going to be just sitting there, like my friend Paste used to say, you're going to be sitting there, standing on the street corner, holding your underwear, going, what the hell happened? Right? You got to learn, when is retail business, when's it wholesale business? Hey, Moran. And that is a huge difference between retail and wholesale business, right? You find this strange, Ian, because you've never ran a short squeeze. Ian, and you've never owned all of the inventory. This is why people get caught short all the time. Number one, they're not watching the offer. Number two, they have no idea what the offer is. Number three, they have no idea what the offer means, right? So if you've ever done a deal, right, when you do a deal like I've done 200 of them, your clients own all the inventory, right? Overnight inventory is long. Trading Corey. Oh, hey, it's Corey. How you doing, brother? Well, you know how you can tell? The single prints are right here, Corey. See? This is like a big flashing neon sign going, oh, fuck, we're trapped here. Right? It's like a big flashing sign. Help, we're trapped. Remember those ads in the 80s? I've fallen and I can't get up? That's it here, and they're trapped here again, right? Good to see you, man. So, yeah, you know, it's brutal. Because even I was expecting some liquidation, right? You know, maybe we could let the people who got trapped short on Friday and Thursday and Wednesday, you know, but no, there's just no bid, right? And Ian, getting back to you. So when you take a deal public, you own all the stock, right? When you own all the stock, you get to set the price. Now, if the buyers don't come in, you mark the price down. It just keeps going and going and going because people keep shorting it, and then you get a natural bid, right? When people short a market, they sell something they don't own and they have to buy it back. So every time you create a short position, you're creating buyers. And if you create one short position on top of another one, on top of another one, you're creating stacks of buyers who are racing to try and buy back what they sold, right? Why does price keep switching? That's trading. Because somebody will come in and sell on the bid, somebody will come and buy the offer. Right? That's what we call order flow. That is the flow of customer traffic. Right? Now, that's a good thing. Sometimes it'll trade only on the offer, which means people are desperate to buy it, so they're desperate to pay higher prices. Right? You said the shorts are trapped, but how about there were buyers and sellers rise price higher? The sellers control the market, David. So if I know that you're short, right? I've been a seller my whole life. I've never been a retail trader until after my heart attack. Right? I've been a seller my whole life, a seller of size. If I know that you're short my stock at $3 and I've got some buying coming in, I'm going to raise the price to 4. When you go to buy it at 4, I'm going to raise the price to 5. So basically what I'm going to do is I'm going to put you in a glass bottle and suck all the air out of it until you can't breathe. Those are single prints, right? Good questions, you guys, right? You are trained to be a retail trader, right? You're trained to think that buyers and sellers compete. You're trained to think that markets have gravity. You're trained to follow price. You're trained to stand in line to buy an iPhone. You're trained to camp out, right? And sleep on a parking lot floor to buy a PlayStation 245. You have been trained by society to be a sucker. Now, there are people who've been trained to be the seller, and that's a huge difference. The majority of people are not trained to understand how business works, because if they did, how the hell would you take advantage of them? Get it? You guys have been trained, everyone, myself, everyone. Nobody leaps out of the womb going, I'm going to sell 1 million shares of stock today. Right? They want to buy the newest, shiniest thing. Right? Now let's see that we've put in that all-time high at 76.20. Let's see if we backfill and if we can break the 17 3/4. Right? We have been trained to be suckers. Right? We have been trained to chase price, stand in line, buy the shiniest thing. They want you to just keep buying and buying and buying like a chicken with its head cut off, right? That's why people fail at retail trading, because they don't understand how business works. Right? So what we want to do is train you to think like smart money. Smart money always makes money. Why? Because they have the lowest cost basis. Very simple. Right? Smart money owns SpaceX pre-IPO. Smart money owns a stock at 20 cents when you're buying it at 10 bucks. Right? So they can sell it all the way from 10 bucks down to 5 and still make money. Right? So right now it's just kind of rotating between 17 and 19. Once again, very, very slow, unpredictable order flow, right? I'd love to see a liquidation back down to Friday's high. Right now it's a little too sticky. Hey, Mrs. Klaus, you're welcome. All right. I want you guys to know, okay, you come in and you look at a chart. Within seconds of looking at a chart, you can relax and go, you know what, business isn't really that good. This way you save your money and you save your hair from falling out, because people are going short, then they go long and they get stopped out short, they get stopped out, and it's just a cycle. And I've been there and I've done it, so I understand. All right, we all go through the same spanking machine. We all go through the same thing. Right? Just because I've been an institutional trader doesn't mean that when I started retail, I was great at it. I sucked at it because I had no discipline. I had no idea that you had to wait for your setup. People would ask me, hey, JJ, what's your favorite setup? And I would say, the FBI agent posing as a fund manager. That's my favorite setup, right? I had no idea what a trade setup was, right? Because we're doing business all the time. We're always selling. We're always selling. We're always selling. We're always selling. Right? My clients own stock at 0.001 cent. Even if they sell it at a penny, they're making, a huge amount of profit. And when they run out of stock, they just print more. It's like an ATM machine. Having your own public company is like having an ATM machine. You run out of stock, you just print more. It's really simple. Now, let's see if we can get down to 16 and a half. I mean, sorry, 15 and a half, which is the middle of this cost basis. Right. So as soon as you see a chart and you see those tiny candles, it'll be like, okay, there might be opportunity, but it might only be for a minute or two. And the likelihood that I'm going to catch that is probably not good, so maybe I'll just relax, go to the gym or something, right? And then come back and save your money and save your mental energy, right? Do I think it's able to trade without a setup? No. Order flow recognition? No. There might be one in 50,000 people who can do it. Michael, I think maybe one in 50,000 people. But you know what a trade setup? A trade setup is just simply a repeatable business process that manages your risk. So if you don't have a setup and you're just trading pure order flow, I think that would have been possible before algorithms, like before 2016, definitely, right? We used to call that being a natural trader. Natural. Now, if you can do it, God bless. But that without having a setup, how are you going to manage your risk? A setup just means that you have a clear business reason for taking a trade. You're not just trying to trade the order flow. What you're talking about is market making, right? 5 years of trading experience is a drop in the hat. It's nothing, right? It's only a matter of time before something bad happens and you don't know how to deal with it, right? I had a buddy of mine who used to try and do that, and he'd do about 100 trades a day. And it just ended up having a heart attack. He did it for about 10 years. He was not even like consistently profitable, and the stress that it caused him, he ended up, he's not with us anymore. Really smart guy, but just, tried to trade just order flow recognition. Yeah, if price is lifting and printing on the offer, yeah, it helps the look below and fail, definitely, right? Because if you can't buy it on the bid, you got to take the offer, right? The only problem is here right now it's choppy, so there's no follow through, right? So the offer will lift for maybe 3 or 4 minutes, and then boom, it'll slam back down, right? So it's very hard to trade a market where there's not much follow through. It's very frustrating. But definitely in the look below and fail, I teach people how to use the offer, watch the offer, right? Put your orders out so you actually have a chance, right? That's what we want to do. This is one of the best times to learn. You know why? Because I know this sounds bad. The frustration level at this time in the markets is insanely high. This is the best time to learn how to trade because the frustration level is the highest right now that I've seen in a long time, right? The level of frustration that we're having right now is really, really high, which makes it a wonderful, wonderful time to learn how to trade because you can learn how to manage that frustration, right? So you think later can only be easier? Sorry, David, I don't understand the question. I think later can be easier. Well, it's never easy. It's just more clear. There's sometimes when business is clear and sometimes when it's not. You know what I mean? Well, it's not clear, David, right? And it's frustrating, right? But it's the best time to learn, right? It's the best time to learn because you have to learn how to deal with frustration. People who can't deal with frustration, people who can't deal with being wrong, they're what we call fair weather traders, right? When everything's great, you buy a stock, it goes up. Woohoo! I'm smart. I'm a brilliant genius. Then the markets change, and you see it all the time. Oh, I made 50 grand trading in a month, and then I gave it all back, and I lost another 50. How many times have you heard that story? Over and over and over again, right? Oh, I started trading during COVID, and I made 25 grand. How are you doing now? Well, I gave it all back, right? Because you don't know how to deal with getting punched in the face. It's like getting in a boxing ring, right? And you're boxing like, you're an adult and you're fighting a 10-year-old and you knock them out, right? But put you in that same ring with somebody who knows what they're doing, they're going to clean your clock. You guys get the analogy? Right? Yeah, it helps you save money. Exactly. Here's what old man Thompson told me at my first job. Okay? This guy was 76 years old. He was worth over $600 million. He grew up during the Great Depression and he used to go door to door selling investments. I started working at a brokerage firm that he owned. Now let's see if we take out these stops here, right? If we can take out the 13s and the 14s, we have a chance to come down to the previous day high. So if you're short from the 16, 17 level, put some bids down here, right? So the old guy said, listen, kid, you don't have to make money today. I don't expect you to make money every day, but I expect you not to blow up my brokerage firm that it took my whole life to build. So I want you to be long-term greedy. Don't think about making money today. Think about making money in 5 years, 10 years, 20 years. Because guess what? If you blow up today, you're not going to have any money tomorrow. Sometimes the business will be clear and there will be clear setups. Sometimes it will not be clear and you won't be able to see anything. When it's like that, just leave it the hell alone. Don't be stupid and don't screw with my money, all right? Be long-term greedy, and that's, as we end this session today, that's what we're going to leave you with. We want you to be long-term greedy. Don't be short-term greedy, right? Yeah, you're definitely going to see bids at VWAP, right? Previous day high, exactly, right? So you want to make sure that you're only trading at good spots, doing good business, right? You'll be fine, you know. It's going to be a little frustrating, but it's okay, right? You'll be all right. Just hang in there, you know. Be disciplined, be smart, okay? And if you want to learn how to trade, come into our room, we'll teach you. We'll spend the time with you. We'll teach you how to do this so you can make a living, right? And you actually got a shot, right? We'll teach you how to do this, right? In our trading room, we don't have any BS indicators and we don't use flowery language. We tell you this is where you take the trade, this is the business reason for taking the trade, and this is when you get out of the trade or when you stay in the trade. There's got to be a valid business reason for everything. If there is no business reason, there is no trade, right? Where other trading rooms will say you got to trade this indicator, you got to trade this moving average. Right now, what we're doing in our room is people who trade candles, right? Do you guys trade candles and patterns? So this week, what we're doing, and I've got a video up in our room. I break down like the head and shoulders pattern, and I show you the mechanics behind the pattern and why it's created. So if you want to learn why your trading pattern fails, it's because you don't understand the business that creates the pattern. Come into our room at tradingsyndicate.org. We will teach you how to use that pattern, right, and understand it so you stop losing money. Right? That's the biggest thing. We want you to stop losing money because you can't make money until you stop losing money, right? Most people don't know that. Thanks, everyone. Have a great morning, and we will see you at the open around 9:15 a.m. Eastern Time. Thanks all who are joining us. Let's have a great week, right? And it's looking like a look below and fail here. Let's see if there's any follow through, right? You know, so let's see if, you know, you're buying the 13.5, so the 3/4, right? We found the bid here. You know that there's going to be sellers here, right? If we can clear the 15s, then we'll probably move it back up to 16, 17, right? Right? If we can't hold 13.25, we're going to go back down to VWAP. Pretty simple. Okay? Yeah, it front ran VWAP, right? So if you're long 13.5, like I bought 13.5, I'm selling 14.5, right? I'm out one at 14.5. I'm offered at 3/4 and 15. And if I don't get executed at 3/4, I'll get out of the trade, right? Because I know there's a seller there, right? So first trade of the day, I'm just using the micro to see there's a seller at 15.5. So you know what? Screw you, I'm going to hit the bid, right? I'm hitting that bid. But they're not taking me at a half, so I'm flat, right? Common sense. Just use common sense, right? It's highly, highly forgotten about. Use common sense. It'll help you. Thanks, everyone. Have a great morning. Come join us at Trading Syndicate. We'll teach you how to make a living and keep the money that you made. Have a wonderful morning.